Hello everyone, this is Evan here from the Trade Risk on Wednesday, September 28th with a midweek market recap video. We are first going to analyze the current market environment, then we're going to look at some other markets, sector analysis, and then finish off the video with some individual names. Before we jump into things, a quick reminder, if you haven't yet subscribed to our YouTube channel, you can do so. Bottom right hand corner keeps you up to date with all of the latest that we publish. So if you like these videos, you want to stay up to date with all of the new ones that we push out several times a week, please do subscribe on that bottom right hand corner. Getting into the action this week and today, we finished higher, up almost 0.5% here in the SPY ETF, closed near the highs of the day, so we saw a nice rally today. But let's talk about how we started the week and a little more context around where we are in the market. We started off right here Monday. This was Monday's session. It was a gap lower, and we ended up closing on the lows of the day. So it was a very weak open, giving back, basically retracing almost entirely the FOMC, well, the Bank of Japan, and then the Fed decision out last Wednesday. That entire rally was sort of given up and retraced, to kick off this week. Tuesday, though, was that classic kind of turnaround Tuesday where we saw some weakness, but bulls stabilized us and we closed near the highs of the day. Yesterday was your first kind of clue context that, okay, maybe the bulls have a little bit of fight in them. I've been looking at 215 as my line in the sand. There's no magic about 215. There's no, special fib or anything I'm looking at. It's just a general kind of, where I drew my line in the sand to say, okay, where is the most of the supply traded? We want to stay above the majority of this old range. 215 was some resistance. I want to see us hold above there to start to get constructive. And yesterday we did reclaim that level. Today we added to that level. It wasn't an easy day. Today it was a yo-yo type of session here on Wednesday. We started off pretty much flat on the day. We had some initial strength higher, and then we went all the way from these highs up here around 216 and a quarter or so, all the way to moving into the red and retracing about half of yesterday's session before we once again reversed and closed near the high. So we were up and down today, but we ended up closing on the highs, near the highs of the day. Breath held in there, right? There was good participation today, stocks advancing versus declining. And overall, it was nice to see yesterday's rally hold and actually gain some traction. So what I want to see going forward is us take out this resistance here on the upside. This basically where we traded up to last week, this 217 and a quarter level. That area more or less is the sort of next line in the sand that I want to see the bulls take out, and then soon enough we'll be talking about all-time highs once again if they can get through that level. If we zoom out, you can see we still have this head and shoulders pattern that is at potential here. You can see the left shoulder right here, you got the head up here from this 6-week long range, and then the right shoulder that we'd be developing on right now. Once again, just throwing that out there, not saying it's more likely scenario, can easily turn into a continuation pattern to the upside. Just pointing out the potential for it once again is why this 215 area and then really Tuesday's lows is going to be so important for us to hold on the upside. So we have some nice lines in the sand to use against us. So that's the way we're looking at things. It's still more or less a very range bound kind of choppy point here for the SPY. Notice that the 8 period is trying to get that curl back over on the 20 period EMA, but it's still in kind of that bearishly aligned but very flat sort of and actually kind of curling up now, as I just say, sort of positioning right now. So there's something for everyone. I think the bulls still have a bit towards they're in their court right now, particularly when you look at some of the majors like the IWM and the Qs, which we'll jump to now. The IWM also having a nice day today, 0.75% higher, close on the highs, filled the gap here from Monday. So things are looking good, very quickly getting back to the highs here that we were at just a couple of days ago. That's constructive, uptrends intact, support has held. All all the bullish signs that you want to see. And then the Qs, not quite as strong today, up only marginally on the day, but still position-wise, very much closer to their previous highs here than any of the other two major indices. So very constructive action, 8 and 20, sharply bullish territory, supports held, nice base that it's emerging from. So the Qs certainly on a relative strength basis are still the outperformers here. So a lot to like in the Qs and the small caps. The SPY, it's going to be a mixed territory. Perhaps this oil news can start to be a catalyst for some of the sectors here to start to play catch up here with the S&P 500. Let's look at some other markets here. TLT has had a nice rally off of these lows here. So remember, we broke down from this support level of around 138. This was a couple of weeks ago, came all the way down here, found support, and then we kind of V-shaped higher, reclaimed the breakout level. We are still above this 138 area, although today's session could be indicating that maybe this is a reversal and we're going to start to probe the downside again. But things certainly recovered pretty quick here, so we want to see how this ends up playing out. It's at a pretty interesting spot. You can see the 8 period though is starting to curl back up here on TLT, so doesn't look too actionable to me, but something to keep on our watch as always. USO, we'll go there next. So this was the big mover today, up 5% today. This one's been consolidating. We've kind of been on track here, noticing these lower highs that have been in place since August 8th, I believe, or August 19th rather, ever since making this high up here above 11. We've been slowly kind of just consolidating, getting tight with this $10 floor. Today we finally got that expansion in range, and I'm not one to put a ton of emphasis on volume. I certainly look at it, but today volume certainly stands out here with USO. Take a look, 92 million shares. That's over double the 50-day moving average of volume, and that's right up there with some of these capitulation lows that we saw back here in January and February when oil was down at close to $25 a barrel. So very notable move today, a nice expansion in range, a nice uptick in volume. We're long this, looking for some continuation higher here. It's not the cleanest pattern, but certainly that volume, that expansion in range, and just the sudden change in character is enough to get my attention here. So this is something that we got long today. We're going to see if we can get some forward progress out of this. We have our stop in place. I know there's a lot of rumor on this potential move here, so if it kind of all unravels, then we'll be quick to exit. But for now, this is a trade that we put on today, and we're going to see how that acts going forward. As a reminder, if you want to participate in trades just like this, these are things that we look for, then check out thetraderisk.com and see, learn just more about how we trade and if that's something that fits your style. UNG, we'll move right along here. Saw a nice little reversal today, even though still weak on the day, down 1.37%, gap lower below the 20 period, and you can see trying to get back below, or it did trade back and retest this kind of breakout level here, but it did close on the high, so we're gonna have to see, is this some type of short-term low we can use to trade on? We'll have to see if we get some continuation higher tomorrow. Not actionable enough to me, so this is not a position that I own. We did own it in here. We bought it as it started to break above this line, but unfortunately we ended up getting stopped out for a small gain, break even basically, as it started to retrace this move. So we'll have to just wait and see. Still keeping an eye on it, but it doesn't look too actionable yet for me here. And then finally, gold continues to consolidate. You can see this range has not changed. We're still waiting to see that kind of break out and make a move out of there. And silver, very similar situation, still consolidating here, not too actionable for us. Just keeping an eye on it for the next couple of weeks. Now getting into some of the individual sectors, XLE clearly the big mover today, a huge rip, 4.34%, one of the largest single day moves here in quite some time. You can see it's getting back above this resistance level. Things have certainly gotten messy in here, but this $69, $69.50 level has been important in the past. So this is a good just rough line in the sand to use, and we are above that now, so that is constructive. XLK continues to obviously trade near highs, very similar to the Qs here. XLK technology up near the highs. That's where a lot of strength is. Semiconductors, these haven't changed in quite some time. We've been talking about these as the leaders, and they just continue to demonstrate that. On the downside, XLP continues to be weak. Look at this. Looks very much like a bear flag, still just below the 8 and 20, or very much close to being below the 8. But you can see it's just sort of hanging out here near support. Looks vulnerable, but we'll have to see if support can actually hold there. Financials not doing anything terribly exciting either on a relative basis, still sort of underperforming, and even discretionary isn't doing all that much down here, but on a relative basis, those are probably the three weakest to just point out. If we get into some individual names, Apple saw a nice little bounce today, up almost 1%. You can see this one's pulled back. Last video, I talked about these dips being more so opportunity. That's the way I'd view them in Apple. As you can see, it just continues to consolidate here. Nice little flag. If you go to the weekly chart, still like the breakout here. So I like Apple still. It's consolidating, needs time. I have no position, but we'll have to see how that acts going forward. Google next. This one had a downgrade yesterday, but it did kind of take that with stride today. Didn't really roll over or give up the 20 period. Didn't give up yesterday's lows. In fact, it came all the way back, closed flat on the day. That looks constructive to me. Now we just need to move back above 810, 812, and this could be very quickly back to all-time highs in Google. Netflix is very tight here. Still continues to be very tight. These weekly range has shrunk considerably here in Netflix. And it's a matter of time before this really sees some type of nice expansionary move. Whether it's up or down, I'm not sure, but still something to keep an eye on. Basically $100 on the upside. Below last week's lows would be a bit of a concern as well. So something worth keeping on your radar for you longer term traders. Amazon, this one really starting to accelerate to the upside now. You can see it was trading very kind of cleanly in this nice little sort of rising wedge here, but it's kind of blowing off and accelerating to the upside here. So looks good to me. I mean, probably overbought, but it's at all-time highs, and I sure as hell wouldn't want to be fading that. So Amazon certainly looks good. Twitter also certainly in the news recently on all of this takeover chatter, which basically every company now is a possible takeover candidate, it seems, for it. Struggled a bit today, down 3%. Of course, Gravity just catching up with it a little bit. It's had about a north of 25% move in a 4-day period. So some consolidation here, while the rumor and while the news kind of cools on this is probably the most likely scenario. Let the 820 catch up here, see if it can hold up high in this above $22, and then we'll see if that one can hold up and then make a secondary move higher in the coming days. Finally, Alibaba will end there. This one is continuing to trend higher as well. This is one that we've talked about for quite some time. Still have no position in it myself, but just continues to ride above the 8-period EMA, showing tremendous strength, and continues to just reward anybody that's holding on to this and sitting tight. So clearly a leader. This is something that when you start to get your first good sized dip in this retracement consolidation, you're probably going to have a lot of interest here. So this is certainly one you want to have on watch for the near future. And that's it. We'll end it there.